Hello everybody, this is Bulldozer Investing. Today is February 17th, 2021. It is 5:58 p.m. Today we have a long list, total of 36 tickers. Before we begin, I'd like to remind two things. First one is, if you do want to skip over some of the names or jump to the name that you want to review, please visit the youtube.com and watch us from YouTube. Click the description button off of the YouTube video and you'll have an expansion of tickers and time bookmarks, and you can click on the time bookmarks or the time links and skip to the names that you'd want to see. If you watch us on other platforms, you'll not be able to click on the video description, so that's why I was recommending to everybody to go to youtube.com and watch the video that way, which would save you a lot of time. The second announcement I'd like to make is that if you would like to request any tickers to be reviewed daily, please visit our Twitter account and look for the daily tweets. So I'll just show you what I'm talking about. And please do not request under the YouTube comments because I don't really read all of them. So what I do is daily, if you visit my @bulldozer_INVST, and that is me, and look for the pinned tweet that will say you may request a ticker under this thread. If you don't see this, just wait for it. Sometimes I post it in the middle of the day, sometimes I do it early in the morning, so it's not consistent, but it'll be there shortly before 1 p.m. US Eastern time. And you'll just go ahead and click on that tweet and you can write a comment. You can leave the starting with a dollar hash mark, or not a hash mark, but a dollar symbol, and write your symbol. Just request only one. As you can see, there's so many people requesting. I can only do so many at once. And in fact, I just missed CCIV. I have to add that right now. So there's lots of requests today, and I'm going to try to go over them very quickly. And before I forget, I'm going to go ahead and add CCIV to the list today. Caught that last second. So if I do miss your request, please don't mind. It's probably not on purpose. It's just that there's so many people actually requesting that I can't, like when I read, I miss, okay? So let's begin with our first ticker, VIX. As always, I'm going to try to do everything quickly and not try to educate as much this time because I have so many tickers to review, okay? So VIX, again, another attempt, an unsuccessful attempt, basically closing the day below the bottom trend line that we drew. Basically what it did, and as I mentioned, most likely if it does break, it'll probably test the moving day averages. In this case, it would be 50 moving day average. Tested it, touched it to the cent, and then just came back, bam. And then the 9-day moving average was a support. So VIX is not completely dead. I see this rounding bottom. You see this rounding bottom. So it might, it might do a rounding bottom and a spike, and that spike might come for 25.43. I'm expecting somewhere around Friday. What is today? Wednesday, right? So Friday you might see another spike, but tomorrow is going to be an up day for SPY. That's what I'm feeling. Yeah, it's just a feeling. You can't know every day what's going to go up or down. You just have a general direction, an idea of what should happen. Now, clear rejection off of the 50-day, but a rounding bottom seems promising for VIX to be bullish. However, it needs to first get inside the cloud, or else you'll just see a quick rejection and a bounce down. The 9-day moving average had seemed to be a resistance. Now it acted as a support, but it's a red candle. So I'm going to have to watch VIX very carefully tomorrow and the next couple of days to see what's going on. But I told you many times that the rounding bottom on VIX before any huge spike on VIX happens usually over a period of time. So if you see a rounding bottom through a couple days, that's not a problem, because you see this rounding bottom through a couple days and then it like shoot up to the cloud and then bounce back. That's what's going to happen. It's going to shoot up inside the cloud and then bounce back. Okay, but it is surely building. So this rounding bottom is still continuing. So VIX is not quite giving up. As my initial review, I thought that we're going to break down 20 and revisit 15s, but that's not the case right now. So I'm neutral on the market because VIX seems like it's rounding up. Yes, it has trouble going over the moving day averages, and we haven't even seen if it, if it was strong enough to even get in the cloud and stay there. And we'll see all of that in a couple of days and next week. So my prediction of market correction on midterm of March, let's see how that's going to go. Watching the VIX very closely. Again, it's not going to be a huge correction. I'm expecting something between 5 to 10% pullback, and the markets will continue from there. Next up is SPY. I'm going to try to quickly review. As you can see, like if I were to remove all these, lines and boxes that we drew before, there is no real technical damage. Although, and look at the candle that finished green. Although all day long today, we were down like almost -1% and people were freaking out. And then here we go, finishing the day positive with a green candle. So if it was any other day and you probably didn't watch the market today and just seen this, green candle, you're like, wow, the market is strong. We got a support at 9-day moving average. We got a support right above the fib channel that we've been talking about, that it's an important defensive line that the bulls have to defend, basically. And they have been. So the low of the day didn't even, like, it was close enough, but it couldn't even hit the bottom of this, or the on the line of the 161.8 fib line. So markets, to me, all the negativity and everything else, which I just mentioned that I'm expecting 5 to 10% correction sometime in March, but till then, I think we're just going to hit $402. Then we'll see a real correction, or a pullback. In my, like, when I say correction, it will freak out people. It's not going to be like a huge correction, but 5 to 10% is a mediocre one pullback. Not a big deal. If you look at the weekly or the monthly candles, you won't even notice. As long as you're playing the game right. Now, a lot of people, what they're doing is they're day trading, they're jumping on this, they're jumping on that, and then think that they're doing something positive. And then at the end of the year, you look at their balance sheet and they're like, down 10%. Invest little. Let's say you have $10,000. Invest $2,500 on a given stock, and then just accumulate it every month. Put like 500, I don't know, $100, whatever your budget is. That you decide. You're a millionaire, you can put 10,000 and put like 10,000 every month. That's your thing. But the point that I'm trying to make is that let the pullbacks give you a smile instead of, dirty diapers. So you don't want to, dirty your underwear when you see a 5% pullback. That means you're involved too much with margin and extra leverage accounts and so forth. Don't do that. Then it's going to freak out, and you're going to get yourself, as I've been talking about it for the last couple of videos, you're going to ruin your health. Okay. So that's my incentive of how to play the market. A lot of people want to become millionaires in a month or so. That's not how the market is designed. It'll give you, and it'll give you with one hand and take away with two hands. So just be careful on that, okay? So that's our SPY analysis. I think SPY doesn't look bearish right now. I don't like the rounding bottom. The rounding top. However, the 9-day moving average and the fib support seems like nothing is really technically damaged here. As long as we can break this upper channel, I think we're heading down to 402. And we'll closely examine SPY for that March correction, mid-March, April correction that I was expecting. But I'll make sure to mention about that on my videos if I do think I get a signal of somewhat. So next up is QQQ. We have talked about SPY extensively. Let's see how QQQ differs compared to SPY. Now, one thing for sure is that QQQ had broken down that 100%, closed above it, closed above the 9-day moving average, and then also got this support that I was talking about, this red line. So again, are we in a huge major correction, or are we just, trailing, relaxing until the next move up to 344? We cannot say that. I mean, I think there was a buy side today. Like if you watch the sell, like if you look at the like, I don't know, 5-15-minute candles, you can observe that the market was definitely on the buy side, and you can read the news about it. What is this wick? It's just sometimes these low volume things are just like a glitch. I don't know what it is, but all throughout the day, if I make the day from 10, here you go, like 9:30. Okay. Do you see like besides this spike right here, I don't see like major selling. It's just balanced. It's just selling, buying, selling, buying. So I mean, if you see a huge selling, if you see a systematic selling through, 30-minute candle, hourly candles, right? I don't see that. I don't see people leaving. I don't see the institutions like fleeing the market. So when I see something like that, I'll definitely, take in consideration of, okay, we're topping. But, the beginning of the day we have sell, and then the end of the day we have buys. As you can see here, all buys, more selling, half and half here. So I don't see okay, any sign of market correction. A lot of people are freaking out. Look at these waves, guys. It's just like, 5% up, 3% down, 5% up, 4% down, and eventually, in a couple months or so, you're going to be like 5% up. These are indexes. These are not something that goes up 5% every day or 5% every month. If it were to go up 5% every month, we'll all be millionaires. Okay? So you got to consider, you have to consider that these are indexes. They go up 1%, 2% a week, and then go 1% down the next week. Okay. Next up is Russell. So let's take a look at IWM. Again, we talked about the flag we drew. Again, it finished. So all the major indexes, although like market was very negative and people were very afraid of what's going on in the market, funny enough, all of them had green candles for the day. So I think that the fact that 9-day moving average is now a resistance for Russell, and remember this bigger channel I drew, and I said I'm expecting Russell. If in any case, I thought that this was a bullish flag and it broke and closed, so now the general direction is down, and you're going to look for the 20-day moving average and where the Fibonacci level meets at $218, and approximately it'll go back and forth and probably touch the bottom of the channel before moving violently again. Now, sometimes these candles, it can hit the bottom of the channel in 3 days. Sometimes it can take 1 week, 2 weeks until it finds the bottom and then goes up to the next one. I've always said that Russell is going to go to 240 before any major correction. So this is a pullback. It's not a correction, and I think it's a healthy pullback. Again, we had more buy side in the market today, definitely. You see the sell volume, and then all of these candles are buy, buy, buy. Not as much as the volume that we've seen in the sell-offs, but overall, volumes are pretty equivalent. Like I'm not seeing violent selling here. I'm not seeing fleeing the market, and there's no reason to be. Now, what I think, and you can say that it's a conspiracy, but this is the thing, right? When the markets or the economy recovers, I think people are scared that the Fed is going to back off. So what's going on is that there's some selling off because of that. But the Fed keeps saying we're behind the market, we'll be there, we'll be there. And if they don't say that, the market would definitely get like a 15-20% correction immediately, pop the balloon. But right now, pop the bubble. But right now, I think the Fed is trying to stick with the game of pump the market as much as we can. And that's why you're seeing little sells and small corrections instead. Next up is Apple. As I said yesterday, I wouldn't be surprised if Apple revisits the cloud top, and somebody had messaged me and said Apple hit the cloud top. What do we do from here? Well, again, I can't really know because the issue is this, right? It's under the 20-day moving average. It closed under the 20-day moving average, and it closed under the cloud. That's the issue. Now, what can we expect from Apple, and what should we do? We're going to take a look at the last time it revisited the cloud and how the reactions were. Okay. So when it revisited the cloud, had a hard bounce, and then revisited the cloud again, had another hard bounce, and then revisited. Do you see how long it took? And then right when it cleared, and then it went all the way down and got a support at 100. So what I'm thinking is this. If we get a support at 100 immediately around 124, that's when you jump in. But if we get a bounce up tomorrow towards 134s, 135s, and it goes in the cloud again, bounces again, then then I'm gonna say, okay, expect like this scenario, bouncing off, coming back, bouncing off, and then slowly die. So I think what's gonna eventually happen is you have two scenarios. One, it could just immediately go down all the way down to 124 where your 100-day moving average is, and it's consistently being supported, and that's going to be a strong buy point. The second scenario would be that it bounces back and forth within the cloud top and then gets a slow correction eventually to 124 120s and then goes up. Okay, that would be two scenarios that you need to watch out for. Now a critical point, again, it would be let me draw another line. Let's delete. We can actually move this, right? So the critical point is here. Okay. So you see the top of this candle and the bottom of this candle is where you're going to have a support. Watch that line tomorrow. So you can move this up, down a little bit. I'm not going to have like a perfect. So you're gonna have couple of points here. I think this would be a better one. You're gonna look for the 128 tomorrow. If it bounces from there, I think the bounce can go all the way up to 135. So you're looking about an 8-point bounce, but you gotta see if 128 holds. Worst case, we're coming down to 124 where the 100-day moving average is, and last time it revisited twice, it went ballistic. And remember, this was a potential double bottom, but it didn't do it. So remember that even if you break off the cloud, it could come back and do a double bottom. So let's see, I think this is going to be the scenario. It's going to come down towards this red line, which is sitting at 128, go back up, then curl back down and revisit the bottom of the cloud again, and then move up. So if you're buying options on Apple, you're basically making the rich people more richer by giving them their premiums. I wouldn't buy options on Apple right now. And if you're a holder, you can go ahead and hold it. If you want to buy it, 124 would be like a very nice buying point, or 128 would be another very good point. Remember that I was the person to tell you don't expect much from Apple these couple of weeks, and in fact it could retest a cloud, and it did. You can start buying, but I don't like the fact that it lost the 20-day moving average, and when it does, it usually goes all the way down 100 moving day average. I think that's what's going to happen here. Last time it revisited, it went under the 20-day, it dropped a couple bucks. Again, couple bucks. Again, this time it revisited the 100. If you lose, again, this time it revisited the 100. So that's what I'm thinking. If you lose the 20, either you're going to drop a couple bucks and go down to 128, 127, or go all the way down 100-day moving average, which is around 124. That would be a super entry. Okay. So that's Apple. I knew it was extensive, but I felt like I needed to explain a couple things in Apple. Next up is American Airlines. Now, airlines, cruises, everything, they're on the move right now, which is kind of odd and surprising at one point. A lot of people are thinking, okay, the economy is moving, numbers are great. Now, what's the next move? Well, the next move is going to be your low-performed, lackluster cruise lines and airlines. So in that case, what did the smart money do? Move into airlines. Now remember, a lot of people had asked me about Carnival Cruise, which I'll cover today, American Airlines. I said yes, it looks bullish, but don't go into the first breakout. So it did do the first breakout, and then eventually what had happened was it basically came back down, and I said look for the double bottom confirmation, which it did. Now it's on a move. So let's see where that next move is going to be. And I like the 9-day moving average support on American Airlines. Again, a lot of people are going to think, it owns a lot of debt. Well, you can pick another airline, right? You can pick other airlines. That's fine. They all move the same way. Now, if you want to do this, let's pick this from here, this ABC correction. Let's delete all of this, okay? Now the move that I'm expecting, there could be two moves. Pull it down here. I think this would be a better, double check. Yeah. So the next move could come up to 1872. Again, these airlines, it could go up 5%, 6%, and then next thing you know, it gets a huge correction. Don't fall into that trap. Again, I guess they're recovering a little bit, but they're not going to tell you that they're going to do great, of course, so their forecast is always going to be low. I would say that if American Airlines somehow comes up to 1692, it's a good buying point. Where it's going to head up to is 1873, 1966, and eventually $22. Now, if you want to zoom out, and if you want me to give you basically a maximum amount of Fibonacci retracement from the maximum amount of time frame we could do is right here, 825, and this is going to be like a ballpark area. Okay. Again, you see how like this 50% and this 50% is exactly parallel. Sometimes that's why I just feel lazy to draw like too many fibs, because they always end up being in the same place. Give or take, if you want to take the higher time frame, I can fix this by making it more precise. So 2935 and 825. So making this more precise, you're looking at the levels of $18. So where is this? Around 1880, and then you're looking at 2129. I think 2129 should be your maximum goal. We can delete the short-term goals or just basically draw boxes, but I'm not going to draw boxes. This should be good. So this is what happens. If it comes here at 1877, 1880, it might come back and get a cloud support or hit this channel and then move up, but you're eventually going to look at 2129. Ultimate target would be the old time, but I wouldn't focus on that yet. Now, if other airlines and other, like Spirit Airlines, Alaskan, Virgin, Delta, Delta probably much better, but United, so those will probably almost have the same chart. One will follow the other. They'll just trail each other. One will move faster than the other, but they're going to all move about the same percentage. Next up is ABML. Okay. I think we did this before, so I'm just going to do a quick analysis to see what's going on. Now, you might see a reaction on the 20-day moving average. If you break that down, and I said before about this name that I wouldn't be surprised if it revisits either the top or the bottom of the channel, the box. So you're looking at $3 to 260 area. But if it bounces from here, okay, if it bounces from the 20, I can give you that scenario so you can get the bottom, the top, and then the bottom here. You're looking somewhere around 445, 465. Okay. I'm not sure that if it's going to bounce from 20-day moving average, so you got to watch that carefully, because these names I'll forget, right? I don't watch them like every single minute. I don't watch anything any single minute unless I'm studying and like trying to learn how stocks behave. But other than that, I don't really watch every single name every single second. So you have to do your own risk analysis and watch your stock. So 355 should hold. If it doesn't, it's going to drop down to $3, definitely. But the pennant, it could be a false breakdown, and you can look for a higher move up higher towards 626, and eventually this where the channel and the fib meets at 858. I don't know what the battery metals company, I don't know what it does, but again, the sell-off is in lower volumes. I don't see any high volume, like I don't see this type of sell. Even that it recovered. So just be careful. You know where to average down. Don't go ahead and go in heavily in a single given name. The MACD, stochastics, RSI, all on a bearish level. You have to have that 20-day moving average support. If you don't, you're going to see this drop to the bottom of the cloud almost. So just be careful on that, okay? Now again, we're gonna do something different. Remember that couple videos ago, I was asked to do Dogecoin or Doggycoin, whatever you want to call it, and I did that. So it was pretty technical, and I said, you know, please don't mind me, please don't laugh. This is going to be my, you know, first time actually, you know, ever doing a crypto chart. So this time I was asked to do Bitcoin, and let's see how we do that. Again, don't judge me, guys. I'm not a Bitcoin person. First time I got in, I basically scored a 15%er. I got in at 35,000. If I kept it, I'd put like $8,000 or something. So if I kept it, I probably made more money because now it's over 50K. That was just for, you know, training, and I just wanted to know how Bitcoin behaved and so forth. But so BTC, how would I? See, this is how bad I am. I don't even know the symbol of it. I think I had it on my watch list. BTC USD. I think this is it. Yeah. Wow. So this, okay. I guess I did study off of it. Because look how perfect these channels are, guys. Look at where it hits, where it gets a support, where it got a support. I'll tell you where Bitcoin is going, guys. 58,882. That's where Bitcoin is going. Now, if you think I'm crazy, if you think I'm stupid, that's you know, your choice. Your you know, again, like I said, like I'm not even a Bitcoin guy. Only thing you can do here basically is very simple. Couple things here, right? Let's go ahead and draw a pitchfork, not a pitchfork, I'm sorry, a Fibonacci retracement, and you can floor that from this here and here. Actually, I was being conservative on that one. Let me see if I can get to the bottom of this. Did I do it from here? No, I definitely start somewhere around here. Okay, so watch this level, guys. First level I'll watch is the 52.7. So if it drops down back to 47, don't freak out because that's where your major support is, and 43.59 is where your major support is. Don't get freaked out about it. That's fine. But what I would, my long-term goal would be 67. When I say long-term, I mean Bitcoin moves like every single day. It's like 24-hour trading, but I think it's going to 67. And that's my point of view. I might be wrong. I'm not like a Bitcoin guy. I don't trade Bitcoin. So watch these levels. I'd say any good opportunity to buy, and if the dip comes, would be around 40,000s, like 41, 40, 42, 43, around this area. And if it rips, it could hit the channel at 60,000 and then come back. But the fib resistance is right where the current price is, coincidentally, is 52,700. If it breaks above, it's going towards 59,200. If it can't break above, it's probably going to revisit 9 or the 20, which is sitting around 44 to 40. So you're looking at a value buy, a good buy opportunity around the low 4,000s. Anywhere break above this 100% fib, which is sitting at 52,700. That would be that would take you all the way up to the 60,000s. My max upside right now is 67,000. On a very long-term goal, your goal can be 129,000, but again, that's too far. I'm not even going to go to like 400% extensions at this point. You met the 100% extension right here, right now at 6:32 p.m. U.S. Eastern Time. And what I can tell you is that expect a small pullback. If an opportunity comes and you're looking for a re-entry position, I think the low 40,000s could be a great opportunity at this point. Okay, we'll see how this 52,700 holds or blocks as a resistance. Okay, so that's Bitcoin. I know it was different, but I hope I was I think it's pretty technical. It moved pretty good on the fib levels that I drew, so I think this should be well. So next up is going to be Blink. A lot of my friends own this name, and they always, you know, ask me, what do we do? What do we do? So let's take a look what happened on Blink. Wow, that 20 actually, is 20 or 50? I keep changing colors on myself. 50-day moving average bounce. What a monster. Wow. This move, guys, and I tell you, right, every time I've just said it on ABML, I said if you lose the 20, you have to watch out for the 20 bounce. If you lose it, you're gonna hit the 50-day. And guess what happens? Or I can't recall what moving day average, but look how these moving day averages react, and then bam, look at that hammer, and look how this Fibonacci 61.8 retracement was basically a resistance, and it closed at 47.72, and the fib level was 47.75. So it closed right below it, 3 cents below it. Very technical, guys. I'm expecting to move the stock to move around $50.19, and eventually go ahead and retest 52 where the 9-day moving averages, and these are moving averages, so it could change any second, any day. So, you know, when I tell you a level, you have to be considerate. You have to consider that the moving day averages actually move every day. So my level could be $1 up, $1 down. You just have to watch live. My ultimate target again would be going back towards, we have to change it actually. I'm sorry about that. So we have to change some targets because I actually honestly didn't even think that we would ever go to 50-day moving average. I can delete this and we'll get stuck here. So your first target is 52, and I said like the 9-day moving average, so basically 52 and 54, that should be your sell point, technical sell point. If you're keeping it, you can keep it, right? That's not my issue. That's not my problem or issue. Other than that, I think the stock is going to move back to 54. What I don't like about the stock, I mean, I like the stock, but what I don't like about the chart. Rounding top. Okay. Now this might be the scenario. It might go up, hit this around like 54, 55, and then down and hit it, and then bam. Okay. That's what you need to watch out for in these kinds of names. When you get a rounding top like this, it's a definition of bearish chart. And the rounding top is basically not like within a hour candle or within like a week. This is a whole lot of time. Okay, this is probably beginning of December. Yeah, it is in fact December. So this is December, and we're going towards March. And by March, if we can't break this rounding top, I think this can signal the EV sectors too, like all the batteries, the EV sectors, and everything else. You have to pay attention to also to the sector. So yes, this is having a rounding top, but what is the sector doing? What are other EV charging station stocks doing, right? So you also have to watch out for that, and that's not my job. I'm only analyzing what I'm given, and I have like a lot of names to cover. We're at 33 minutes, and we have like 27 stocks left, guys. I have to be faster. Okay, so that's the story with Blink. It could head up to 54, 52 to 54, but also keep checking that rounding top, which I've said somewhere around here. I said that was my concern, and it's becoming more of a concern every single month that we cannot break that rounding top. So watch out for that. Next one is BIGC. Okay, so we're at the top of the cloud, which was this was the range. I think when we were here, I said I was expecting the stock to move here, but with all the GameStop and the short squeeze, I think this was heavily shorted too, so it just extended up, came back down, and so forth. Now, if you're not in the stock, I will not test my luck because of the earnings. Last earnings, it went from $87. I remember really well. and it went from $87 all the way down to 65. The earning before that, usually what happens with the earnings with this name is that it spikes right as soon as it declares, and then it just dies and it collapses within the next week. So same thing, from $102 it went down to $70. So technically, yes, you're at the cloud top, you can bounce off of the bottom and retest 92, 97, and 112. But the issue is technicals will not work during the earnings. Anything can happen. So I really, really, really would not gamble on a name like this before the earnings. Now, if you're holding the name, I'd sell half my position and then buy back after or before. Now you're going to say, what if it goes up 10%? Just buy the other half with 10%. You'll make 10% with one half and then just, increase your average. I don't even know what your average is, but this is the best scenario because I told the same thing to my friend with FLDM. It crashed. And he got it at the dip, and then today the stock went up 15%, so he recovered his loss. And he owed me a big thank you, and he told me, thank you for this idea. I thought it was stupid in the beginning, but I wouldn't have known that the stock would go down 20% after the earning. So that's the story. Okay. Yeah, so therefore, I don't want to give any technicals on this name because of the earning, because anything I say is going to be meaningless. We want to consider doing technical analysis for BIGC after earnings, but if I didn't have earnings, or if the stock didn't have earnings, this is what I would have said. MACD, stochastics, RSI, all bearish, moving day averages on a bearish crossover. The cloud is within, the stock is within the red cloud. I would look for a support somewhere around 66 and a bounce back and get a support. So you need to have a rounding bottom, something like this. So I wouldn't get in right here. I'd look for a bounce from the cloud to the bottom, come back up, and then eventually regain, and then I'll buy. Where the potential drop could be, I'll tell you that immediately. And again, you might not like hearing bearish sides, bearish story, bearish scenarios. Not a story, but as the stock can almost reach up to the 100 Fibonacci, 100% Fibonacci, which is 688. Worst case scenario, it could go down to 54. These are your bullish scenarios, 92, 97, 112. So you do your own risk analysis, guys. This is a stock that I cannot pick one or the other looking at the chart and the earning call tomorrow. So this is all I could do for you. Just give you the levels and you do your own risk analysis. Okay? If I had seen a bullish scenario to it, sometimes I'll jump and say, wow, the stock looks bullish. I can't say that in this scenario. Okay? I wish I can because I like this name, but at this point I can't. Next up is CCI. I hope this wasn't a typo, like somebody didn't mean to type CCL. Crown Castle. I mean, it's paying dividends. The stock has been sideways. If it does break out of this channel, then that would be a good thing, but I don't know. The chart doesn't excite me, but I see this as like a good, like 401k, solid, like, protect yourself from any crash type of stock. Like, kind of like Coca-Cola type of stock. Clorox, Coca-Cola, Pfizer. So here you go. The waves and the channel is very readable. If it loses the cloud, it could dip back to 150. Okay. I do see this cup and handle. In the meantime, I can give you where it could go upwards if it breaks above the channel, but the channel has been consistent for months, almost a year now. You're looking at 171, which coincides with the top here, and then you're looking at 184. Okay. I could do another extension, which probably will not change my targets, but again, as I mentioned about the extensions, as long as you get it correctly, they're gonna have like the same points here, right? These stocks are not really like momentum stocks. I mean, not that I know the stock inside and out, but from the chart that I can tell, of course, it's a solid company. You're looking at a resistance of $164.50, and your target should be 170.31. We said 171 on the other fib, and then you're looking at 179 for the upside. Okay. I like this cup and handle. I like this W. I like this dragon formation. So the current formation is bullish. And let me show you what I mean by that. Okay. You have the head, first leg hump, second leg, and then there you go. You have the flag. Okay. And this could have been the flag, but you can make the flag bigger. So obviously this 61.8 is your, this line right here is going to be your resistance. If you can break above this line right here, this fib line, okay, you're going to see 161. Now, if anything goes wrong and you're going below the cloud, you're going to look for a re-entry somewhere around 149. Next stock is CCIV. Now, this stock, we've been dead on right, and then the other day, and then it moved up higher again. I mean, you're pushing my limits. If you want another chart for this, I can't do it daily, but let's see an hourly chart and see how that looks. Because I mean, I can only do a chart on an explosive move like this as so much that it's like from one point it'll be a guessing game. Because if I don't see technicals, honestly, I can't make up stuff. Like I don't want to be the guy to make up stuff and then tell you, oh, I guessed it right. I mean, honestly, the hourly chart, I can't do anything. Let's look at the 4-hour chart. Maybe we could pull something off from here. I'm awfully quiet because I'm trying to figure out what the hell is going on with the stock. Um, this is a pretty explosive move, guys. I mean, in all honesty, if I were to give you any target on this, it would be $72.19. But this is the real issue. The stock has gone so much, and it's not even a stock yet. It's a freaking spec. So they're gonna try to merge with what is it? What's the company's name? Uh, Lunar or whatever. I'm sorry for my knowledge. I'm just lacking knowledge here. I should have followed up. I forgot. Honestly, I forgot the name. Like it's like Insomnia or Lumar. I don't know what the car company was. It's like the ex-Tesla engineer. He opened his own company. He believes that he has a longer range, better efficiency, and he's building his cars. And you're probably sitting and laughing at me for forgetting the car's name or the company's name, so I'm just going to quickly search up and tell you what it is. So it is Lucid. Yeah, I knew it was, I'm like, insomnia. It had to do with something to do with sleep, right? So it's Lucid. It's the car company Lucid. And I'll show you the pictures or the images of the company. Now you're going to be like, yeah, we already know. Why are you doing this? Well, maybe for those that that don't know it, I mean, all these electric cars kind of remind me of Tesla. It was like the side panels, the doors, the door handles, like it's just a knockoff from Tesla. Like stop copying the freaking door handle from Tesla because I really don't like it anyways. Um, if they don't come out, you're kind of locked out. I don't know if there's another way of entering in the car, but the conventional way is that if you have a handle, you'll always have an emergency key. You can always get in the car with that. But if these handles don't come out right, I don't know if they're air compressed or electrical. I don't know what it is, right? But this is the car. and it doesn't look bad. I dig into it. I buy it. I think this front LED lights don't look that well. I don't dig into it. As you can see, very minimalistic. And these cars that what I don't like about these electric cars is that they're cheaply made, honestly. You're paying the technology, not the quality. Yeah, the crash safety test and all that, you know, like is a strong car and so forth, but I just don't, I mean, like I'm paying 100K to a car and then like I'm sitting in a Honda Civic quality. Like I just don't dig that. You're gonna say, what about, you know, what about I can just buy iPad Pro and stick it into a Civic or something. Like it honestly, like you're driving a Civic with an iPad Pro on the display. Like I've always been a Mercedes guy. I like the quality. I like the ride. I've had BMW, Audi. Audi is like a mixed breed of Audi, BMW, and Mercedes. I actually like how Audi handles. I like its handling. It's just the reliability is an issue, and I've always been a Mercedes guy. Look at this knockoff Android tablet. Like, it just looks funny to me. Like how, I mean, honestly, I don't want to criticize the car. They're trying to save the environment and so forth. It's just that I don't know. I honestly don't dig these cars. Um, it doesn't appeal to me. Maybe I'm just too conventional. Maybe there are other better pictures, but I really think like Hyundai Equois look better than any of these cars, and you can get it for like $15,000. I know I'm kind of going off topic, but and I'm not even a Hyundai fan or something, right? It's just that you could do so much with the money. You can go freaking buy a house with that money. I mean, 100K. And from what I've heard, Lucid is not even a cheap car. So, and I like this guy. I forgot his name, but let's see what his name is. Doug DeMero. Yeah, yeah. I love his YouTube channel. You could go ahead and check it out. But guys, look how you can get this car for like $18,000, and the freaking back seats move back and forth. It's an 8-cylinder engine. It comes with bells and whistles, and I've test driven this car in my local dealership. It's like you're riding a Rolls Royce. I mean, it's quieter than I've had 750. I had S classes. Um, it's quieter. It's much quieter than 750 because 750 is a performance car anyways. I mean, yeah, it's a high-end luxury, but performance, they care about the performance more. But this car right here, I've honestly, I started laughing when I couldn't hold myself. I started laughing when I was driving, and the guy was looking at me like, "What? Why are you laughing? Like, are you high or something?" I'm like, "No, it's just that I would have never expected an Hyundai car drive better than Mercedes and BMW and cost $19,000, and the mileage was like 50K, and you're still covered under warranty." It was ridiculous, but guys, like I'm just telling you, yeah, I mean, it burns gas and it's bad to the environment and so forth, but it's not like, yeah, I mean, it's burning my pocket if I pay 120K for an electric car. I'd rather go buy a Toyota hybrid, if you want to be environmental friendly. But yeah, you could do something like this on a freaking $19,000 car, and the ride quality. I'll tell you, I've driven an S class. I don't like the new models, but the 2014 and so forth. But the old, the 5.5 engines, the 2010, 2009 straight five, without turbos, 2009 and 10. And I've driven all those S classes. This thing rides much better. So coming back to our topic, I'm a car enthusiast. I don't have too much knowledge, but I like to drive them and check out different cars. So coming back to our topic, we're going back to instead of driving cars now we're into cruises, right? So we're gonna next up is CCL. Um, so what happened here with CCL is that, again, I mentioned, and Puppy Trades had been yelling people like, like buy, cruises are gonna go up. It's stupidity that if you don't buy it you're gonna miss it, and he was right all the way. I think that's when I mentioned in my videos that a lot of people were asking me about cruises, and I just kept getting Carnival Cruise asked me like a million times, and I kept saying I respect Puppy Trades, but I also respect my own technicals. So what I did say was, I think we were somewhere here. I don't want to lie about it. Like it could be the end of beginning of February or beginning of or middle of January, right? What I always said was that don't, I always want to see rounding bottom. I always want to see a clear breakout, And then when it does finally break out of the cloud, it usually likes to dip. So you want to buy the second dip. And it happened exactly as what I said. And I said would probably reach maximum 24 to 25. Downside would be 15 to 14. So you'd have to take your own gamble and um, go ahead with it. So that was my word. I honestly um, am still not believing in the cruises or how much it could go up. I just said that, you're at $21, $20, and you're looking for 24, so you're going for $4.20. That's about like 20%, I think, 20 to 25%. But I also warned people that if you're expecting cruises to go all-time high, they keep selling their shares. So they're basically diluted all the way in. Now they're not like doing reverse splits, but they have more shares, twice as more shares than they were at this top. So if you're looking at 43 and you're looking at 24, you're already up here, as into share to value price, right? So, or share to price ratio. So you're already at 44. Max upside to this is 25. Now if it breaks 25, that would be super bullish because that would be the previous high. Notice how cruises, they can go violently up and then drop for the next 2 months and eat your patience away. So if you're looking for a violent spike, I'd go for 30, but then I get the heck out of it. Anytime you see huge spikes, it loses half the value. Okay. So that's that. It basically reached our goal, and I tweeted. As soon as I tweeted, it didn't go up more than a single cent. That was our goal, and it just came. I tweeted it right here. I said it reached our goal, and then bam, it went down. That doesn't mean that it'll retry and it'll even go to 25, but I honestly like the moving day average crossovers are bullish. All the stochastics look bullish. MACD looks bullish. RSI looks bullish. I believe the stock can go, but it's been extended. It just jumped from 20 to 24. So you got to give it a little break. Maybe a cloud top bounce towards the 2143 would be a nice opportunity to get in. But at this point, I don't think risk to reward ratio is worth getting in. Like I said, I didn't check Puppy Trade's target on this one, so I don't know what he's targeting at. My target is 30.27. The most bullish case scenario would be 37.92, but I doubt it. I doubt it. Okay, so that's CCL. All the internals and externals look bullish. The price action does look bullish. Bounce off the cloud does look bullish, but for a re-entry price, I'd look for the 9-day moving average or the cloud top sitting at 21.43. Next up is DMTK. DMTK, DermTech. It's on a parabolic move. I don't know. Again, it's probably a Dermatech. I'm assuming it's a biotech. It looks bullish. It's just that, it was a $11 stock. Now it reached 81, so 800% in 3 months. So you have to consider the risks into, going into a stock that went 800%. I wish I caught it. 800% in 3 months. So you got to know your risks. So a violent, down would be basically your previous top and resistance, which would be around 46. I'd say the first level of is 9-day moving average, which does fill the gap. So if it gets to 61, it could be a buying opportunity. Again, I don't like to buy the highs. I don't like to buy the dips off of a stock that went 800% in 3 months. That's me. That's just me. I can look for the 4-hour chart or the hourly chart, but again, it's just not going to look well because, if a stock goes up 800% so fast, so furious, you can't do technicals as much. Your technicals won't look good. What I mean by that is like that you're going to try to force yourself to do a technical on it and you probably won't, and it's just going to look shitty. That's what I mean by you can't do technicals on a stock that went like too parabolic. And you might disagree with me. I mean, I have my conventional way of doing technicals, and according to my technicals, I just don't see the possibility of, going into a stock that made 800%. It could go 8,000%, yeah, but would I take the chance? No. As far as your question, so it's your investment, I look for this pennant, so just take a picture of it. Okay. It is not a trading advice. I've never, bought something that went 800% in 3 months, but and I'm not against people who are buying it. It's just that I don't have the, I don't want to say it, but I'm not that brave. I'll say that. Okay. So right here, I'd say 59 would be a very nice play on this one, where the 50-day moving average is on the 4 hours. Other than that, watch this pennant breaking upwards or downwards. If it breaks downwards, you want to get out. If it breaks up, you want to keep it. That's your choice. I'm sorry that I can't do technicals on this chart, knowing that I would probably risk. It's a high risk investment at this point. You have more to lose than more to gain at this point. I don't know the valuation or what the company does. Is a COVID stock. Earnings are coming up. It did have a lot of sell volume, little bit of, little bit of buy volume. But then the funny thing is, the stock went up on a sell volume. I have to watch the daily action on it. Maybe, it went up, started the day high, and then slowly sold off. But I don't see, I need to do a DD on the stock, so I don't want to spend more time on it. But look for the $61 to $59 range to get in. Look for this pennant that I just drew and see which way it plays out. Okay. Next up is DRIO, DRIO. Again, a strong comeback. It was $3 and now it's 31, almost 1,000%. You're going to look for the 20-day moving average support at 24.96. If that breaks down, it could come all loose down to $20. And I always like to consider the bearish side of the story when the stock is up 1,000% in a year. Now let's go for the bullish case. And again, when I'm doing stocks, and I don't see like a distinguished pattern, and if you do, let me know. Like if I do see a very distinguished pattern, I definitely let you guys know. But as far as the chart goes, I don't see any pattern. Yeah. So down first support should come around 25. If it breaks down, you're looking at $21. So let's draw a box so you can remember that. And your upside to this is $37. And from here on, you have to do your own due diligence and figure out what your risk to reward ratio is, and then get them from there. Okay. So upside is 37, downside is about 21 to 2043. Okay. I'm not against the stock. I don't know what the company does other than being a health company. It's just that the MACD is about to cross over, a violent drop from 31 to 25 in 2 days. I would look for a play, a counter play at $25. As you can see previously that the 20-day moving average has been pretty supportive. So if it does come to play and if you see a bounce there, then that would be a good opportunity to get in. Okay. Next up is ENPH. I did the charts. Obviously, I charted it before, and the way I charted it is the way it played. I always say don't buy it at the top of the channel, buy it at the bottom of the channel. Now you got to support at 50-day moving average, you got to support at the bottom of the channel, and you got to support at the top of the cloud. That is pretty good support on 3 different ends. I think the risk to reward is worth to get in on this. Just looking at the chart. Now, I don't know the company, guys. You always have to, if I know the company, I'll start talking about it. But if I don't know the company, I'm just gonna, tell you the technical side of the story. But again, MACD, stochastics, and RSI is fully not ready yet. But eventually it's gonna coil up. I think if it holds 177 area, it's a good stock. I love this flag, and it's a big apparent flag. And upside to this is going to be humongous. I think in the long term, the stock can reach $332. I probably said that before, and I think this would be a very good counterplay at this level. I think it's a good risk reward. I love buying things at the dip, at the bottom of the channel, at the top cloud top bounce, at the moving day average bounces, rather than buying things when it reaches our goal or buying things when it's on the upper end of the channel. Okay. All right, next up is FSLY. Now, obviously, I know the company and I could be more comfortable, and it is a great opportunity. Again, I like how, and the MACD stochastic RSI, stochastics and RSI is not ready yet. This might be an overvalued stock to some people. It did, let's go ahead and see the bearish channels on this one, or the bearish extension. So sitting at the bottom of the cloud, let me go ahead and play around with this a little bit. Yeah, so what happened here is that it touched the 100%. It finished below, but a beautiful, 100-day moving average support, cloud bottom support. All the moving day averages are turning down, by the way. It's a bearish crossover. All the internals are bearish, but if you do want to play the reversal, I think it's a good bet right now, and it might take like a couple days to reverse, and you might not be able to get the ultimate dip. It might just like curl and dip a little more. But I think it's counterintuitive to play stocks like this rather than playing the stock up here, which will not, do you good. Now, one thing is that if it dips under 100-day moving average, you want to watch out. You want to make sure this cloud bottom is not broken down, or you want to give yourself enough room to average down between $85 to $76. Your first entry could be here, and then you can say, okay, I'll average more at 84, and then I'll average down more at 76, because it is a possibility. I'm not saying it could go there, but in any, bearish move, things like this, but this is after, I don't know what kind of news it was, it just like broke down, okay? Now that it's on top of the cloud, here it was at the bottom of the cloud, so it's a different story. So you're looking for a play exactly like this, like it'll just break out and fill a gap. I think it could break out and fill a gap around $106 to $109 area. You're looking at around 20% move, 15 to 20% move, which is a good risk to reward ratio here. But again, in the long term, the moving day averages do look bearish, so you got to play a spike only. Okay, so you got to do the spike only. Unless they change direction, but the price is underneath all the moving day averages, which looks bearish. So you want to play it up to $160. $106 will be my selling point. My buying point would be somewhere around here. At max downside, I'd probably like go down to 91, buy it there, and then sell it around 106. So which is a good amount of, good amount of percentage. Next up is FUBO. So let's take a look. I have the name on my trading account for YouTube channel that I opened. Eventually we started with 10K and then I kept adding and adding. I think my investment, my like own money had become $17,000. Not much again, but it's just like, I mean, it might be much to others. It might be okay to others. It might be like, no value to others. So that's all on how rich or how wealthy you are or how much cash you have. To me, $17,000 is a nice amount of money to even consider playing for a YouTube channel. So and I am risking it. So this is like I'm playing it risky too. I have my other account, but I'm playing, I'm taking full risks on this account. So 100% invested in FUBO on my YouTube account. So I might sound biased, but at least I'm declaring it, so you know it. I like the green candle of today. I love the distinguished support right around 42.87. I love how it's forming a curling bottom. As long as we get higher lows and we keep moving and we go over this 9-day moving average, we're going to probably go, and my ultimate target is $77. Not my ultimate target, but my target till mid-March. And you're going to say, how are you planning to go up there? But you look here, right? 30 to 57. So how much is that? 57 minus 30, 27. Divide by 30. That is a 90% move. So this right here, from $30 to 57.89, I have just said like 57. So it could more than 90%. So you're looking here, right? We're about to break out. So if you think this is the bottom around 43, what is 90% of 43? I'll do the math right here. It's $38. $39, 38.7. So let's say 39, right? So $39 add to 43, you're looking at $82. So when I say I'm being, so look at the top of the box, which is 82.31. That's my other extension. But the bottom extension, which is the bottom of the box, is around $76. So that range, so I'm looking for another 90% move, which could, and it did repeat so many times in its history, and it could do it again within 1 to 2 weeks. So we'll play that. If you want me to talk technicals, as long as we're sticking to the 42.87 level, which has been defended beautifully, we're above the 20-day moving average. I don't like the way the moving averages are still about to do a bearish crossover. I hope it doesn't. As long as we break above the 9-day moving average and just move a couple days, then those moving averages will look bullish again. Looking at the MACD looks bearish, but again, we don't know if we're into something like this, like a small red MACD bars, and then it just curls up to the next move. Even the MACD lines look like it's doing a cup and handle, just like the price action. So we'll see. I think FUBO needs another week or two. This is a journey for FUBO to establish a bottom, just like here, just like here. This was like a very quick bounce, but this one, I think the more establishment you have, the more tries you have, but it gets defended, then you're establishing a huge floor, huge protection, huge support. And then to the upside, it's going to coil up, definitely 67, and then 76 to 82 areas is my target on this one. Next up is GEVO. I think we did this stock once. Yeah. So it broke the channel, and as I always say, and I've always given examples, if you're up from 96 cents to $15, so that's, let's say $1 to $15, that's 1,500% in 3 months, 4 months. I don't think people in their lifetime had made that percentage. So you making that in 3-4 months, yeah. I don't know what the company does. It sounds like it's a healthcare company. I don't know. But, and again, I might sound, very arrogant when I say I don't know, but look where we drew this. You're gonna tell yourself, right? Okay, he showed on the video that this is a resistance, and this was the channel. We hit the channel, or we hit the resistance so many times we couldn't break it. Now we lost the channel, we lost the 9-day, and then we almost lost the 20-day. I would say a good floor for this stock is $10. Now you're gonna say that's almost, 24%. Well, the faster you go up, the faster you fall down. For example, the wheat stocks. I'm not comparing this stock to wheat stocks, but just saying. So again, I said like $10, $9.90, which has been a good floor. Like right here, it has been a good protection. Your first level of protect, and again, if you reclaim 9-day, everything can change, but I just don't feel the bullishness in the stock. Maybe if you're emotionally tied and you know what the company does, maybe they're, inventing something. Maybe this drought was due to the fact that they offered shares. I just don't know the story, right? I'm just looking at the chart blindly, and it's very hard to do. I'm like on my 20th ticker today, and it's been like hour and 10 minutes. I can't just switch on to different charts and then just tell you exactly what's going on. With companies that I don't know, I'm just going to have to look at the chart and tell you what's going on. Broke off the channel, broke off the 9-day moving average, finish the day above the 20. I would, if you're in it, I don't know what to say. If you want to get in it, I would observe. I don't like to catch things while it's falling. I want to see more rounding bottom, at least a supportive area and a breakout, and I don't see that here. I would have an entry around 9.99. And I don't care if you give me a dislike for that because I'm just have to tell you the technicals, okay? No emotions here. Next up is HEPA. Hepion Pharmaceuticals. A different name, Hepion. Okay. Seems like the 50-day moving average seems like a support. Bottom of the channel. If you break down and close below the 50-day moving average, which is sitting around 217, it will not look good. So again, with pharmaceuticals, I don't know. Anything can happen. I don't know what they're working on. It's very hard to do charts on pharmaceuticals when you don't know what they're working on. I can tell you a long-term extension. And I'm sorry, like I'm really sorry that I can't be too much help for some of these names. It's due to the fact that I don't want you to miss the chance of a lifetime opportunity. Things like Novavax when it was $3.80, and my friend was telling me, look at the chart, look at the chart. I'm like, the chart doesn't tell me goddamn anything. If I tell you something, I would lie. Now give me time, chart goes up, you get defended, and you get a defense, you take some levels I could, work with, then I'll tell you what happens. Went from $3 to $15. I told him it's going to come back to $7.50. It came back to $7.50. I said, buy with your life, sell your house, sell your wife. No, I'm joking. Sell your car, and then just buy and forget. And he bought it at $7.50, and then he goes and sells it at 14. Tells me I sold it at 14. I said, well, I didn't tell you to sell. The stock went up to freaking $330, and I wouldn't have imagined to go that far. So that's what I'm telling you. If I'm telling you to do something here, I'm just looking at the technical. I don't know what's going to happen if they, produce a drug, if they do anything. So just, make sure that stays in your mind while I'm talking about technicals. I don't see the upside 342 to 387, but I think this move right here is a bearish move. I don't know what to say. I don't know if they failed their trial. So if you guys like request a name, maybe like put a link or maybe some information that I could feed off of, that would help me a lot, because I don't want to misguide people here on YouTube. This video is going to stay here for some time, and the stock was split at 1 to 70. I mean, looking at the I just don't like to give technicals on such names when it had like a 1 to 7, 1 to 10, 1 to 20, 1 to 40 splits. Existently no volume, and then it's just speculative. Speculative stocks are not technical stocks, so I'm not saying that this is a speculative stock, but from what I'm observing, no real volume, nothing to like, you know what I mean? Like, this is just a spec play to me, just looking at the chart. So I'm not going to do any technicals on it unless you feed me some information about what's going on with the company. Then I can say, okay, consider different things. Next up is INSG, your 5G play in SEGO. I think we've done this, and I said that watch the pennant. The pennant broke down, it kind of, went down to 61.8, came back live. Look for a support at 1626. I see a bearish crossover on the moving day averages. MACD not ready, stochastics not ready, RSI not ready. I probably told you that when you guys had asked me the same thing. So if nothing changes, guys, unless, I teach you something, look at the MACD, stochastics, RSI, look at the crossovers, and I've, drawn you many charts. If you're new, that's fine. But if you asked me this name before and you want to actually, I want to teach you how to fish, not, I don't want to feed you. I want to teach you how to fish so you can, fish on your own and, tell, some technical points here and there. What we're going to do is, by the way, the stock doesn't look that bad. It's just that right now, I don't know what I would say 1623 would be a good entry. Okay. And maybe 1550 could be a nice entry. Other than that, it broke off the pennant. I can't do, what I could do is this. I could do a retracement from here. So it did hit the 61.8. That's good. The bigger retracement, let's see how that works. Yeah, exactly this cloud bottom. 1545 is the level that I told you. And then if you were to look at the shorter frame of time, I guess the first one was okay. So this one right here, it could be a possible bottom, but as I mentioned many times before, I don't go in things unless a bottom floor is established and it's very apparent. I don't try to catch falling knives. I don't try to catch the top. I don't try to catch the bottom. I always like to see a bottoming formation and a breakout, something like this, right? Bottoming formation and a breakout. Now even here, you sell it, or if you don't, it's going to get you. So you know how to, you have to know where to sell and take your profits, and you have to know when to get in, and you don't get in something where you're not on top of a moving average, you're not on top of a cloud box, you're not on top of the bottom of the channel. So unless it gets back to in the channel and above 1780, then I won't change my mind saying that look for a bottoming formation. At this point, I don't see a bottoming formation. At this point, I see more downside to 1626 and possibly 1550s. Next up is LGND. I could call this Legend. It sounds like Legend. It's another pharmaceutical. Again, bearish. It looks like a formation of emergence of a bearish crossover on the moving day averages. Internally, all the internals look bearish, and obviously the price action is bearish. And the obvious, entry point would be your 20-day, 50-day moving average. I'm sorry, on the daily chart, 50-day moving average around 131. And let's take a look at the retracement here. It's sitting at 50. Again, 134 would be your level of 61.8, or the moving day average is 131. So anywhere from 131 to 135 could be a possible bounce play. But again, I told you many times that this is what I like to do. Okay. I like, instead of the moving day averages doing a negative divergence, I like so this is the price. Okay. These are the moving day averages, and it's a bullish crossover. Okay. Here, this is your price. Okay. This is a bearish crossover. So when you get a violent down day like this, so you can do is play the 61.8% up and sell it right here. Unless the company is waiting for some news. So that's that. Having said that, anything that's, you have let me delete this. Okay. So you have a negative divergence on the moving day averages while the price is falling down. you can buy it somewhere around here and play it bounce here, so around right here. And then maybe like this, like this, like this, and then shoot up. So then you get this, bottoming formation, and then the downtrend crossover, and you're like, well, I could buy it at 140. I'm like, well, you're gonna lose a couple months. Just wait till here, and then wait till the moving day averages again, do a bullish crossover, and the MACD just curls up, and so forth, right? So you don't want to lose this time for, unless you're, a quick swing trade going up and down. I don't know your style of trading, but again, this is my style of trading. Possible bottoming formation and the downtrend, and the price goes like this, and this is where you buy, right here. So if my scenario comes true, this is where I would buy. Not at the price of 159. I'm just saying 150.92. I'm just saying the timing, right? You get the timing. And then right here, when you finally break out, bam. Okay. This is the point where you buy. Okay. Just wanted to make that clear. Okay. So when you guys ask me something that's, doing a bearish crossover on the moving day averages, all bearish on the internals, volume has been selling off. And yeah, you could play the fib bounces, but it's not gonna be a permanent bounce. It's just gonna be a quick bounce to the next downside. Okay. So that's LGND. Next up is Microsoft. So MSFT. Below. So I don't know what's going on with Microsoft and Apple at these points. I don't know if people rather do bond yields than the high, big large cap stocks. I don't know what's going on. I mean, at least it closed above the 9-day moving average, but again, this is the total opposite of my trading style. Okay, and I've just told you my trading style. This is a bearish move. Now, if it goes up like this and breaks out, that's fine, right? That's fine. But if this rounding top plays out and it keeps going like this, you're going to see a crash. I don't like that formation. Okay. Now, if you're a long-term Microsoft holder and you've been, buying since $30, I don't know what to say to you. You can keep on doing that, right? That's a different strategy. I like the total. So this is the total opposite here. So let me go ahead and this is the total opposite of my trading strategy. So my trading strategy is like this. Rounding bottom, there's a downtrend, and you break above, right? This is the total opposite. You have a rounding top, okay? You have the uptrend, okay? So if it goes like this and then it breaks down, that's a bearish move. So it's total opposite of what I like about the chart. So I'm going to tell you I don't like anything about the chart right now. Now, this would have been a good opportunity, okay, the wedge, breakout, and all the moving day averages. Look at the bullish crossover on all of the moving day averages. As here, it's total opposite. Moving day averages are catching up, and you're having a rounding top, okay? Again, I don't know what kind of trader you are. I don't know what your position is. I don't know what your strategy is, but that's what I like to tell you. A lot of people can mention that, yeah, it broke out of the trading range, or you can even draw this. Why is it not clicking? So you can even draw something like this. Why? Just click. Okay. So broke out of this pennant, it could revisit, get back to 219, and then buy. Okay. That would be my strategy. And Microsoft ain't going nowhere. So there's no FOMO on this stock, guys. You're going to miss it. You're going to miss like 10 bucks. It's not going to go up like $1 million. Okay. Look at the weekly. On the weekly, it's bullish. But again, I think it's going to have a revisit to 224s. 224s, 220s. The rounding top that I was mentioning is this right here, right? Bam. So here, if it rounding top and then bam, it's going to be a kill down towards like 196. So we'll see how that ends up in it. The rounding top here bounced off the cloud. So you're going to see the rounding bottom, a rounding top, and it bounces, if it goes, touches the cloud, you're going to play that. Now there's a risk to breaking downwards, but that's what I think it's worth the risk to play it. The fact that it's been bouncing off the cloud so many times, you know, looking at 225, 224 area, and then bouncing off higher. Next up is MVIS. So NVIS, I think I've charted this before, and I don't like, again, you know, I don't like charting breakouts like this. You know, you're winning, you're making like, you know, from $2.50 to, you know, $24. What can I say? It's a parabolic run. There's always a danger. You go up 20%, you go down 20%. So this thing was 16% down today. It almost reached our goal. Give or take. I think I messed up on this fib, did I? Yeah, I don't think it's hitting. Let me take a look to see where that is. The low is 486. There you go. So it almost, yeah, it almost reached our target. I think I'll probably wait till 1697, 1610, or maybe $12. I don't like to buy, what can I say? I don't like to buy things up. It's just too risky for me. Now, if it's not risky for you, you can wait till 36. For me, it's not my style. I don't like to chart things that has been on a parabolic. See this rounding bottom and a breakout? Now you can talk about, you know, getting into it, because the stock was at $9. Now it's at, you know, $5. So $3.09 is 33% discount. Okay. Now here at 24.18, at least give me a 33% discount, right? That's $7. Okay. So $8, let's say, right? 24.18 minus 8, that's $16. So those are the levels that I've been talking about. So give me that 16.18, give me the 16.97, then maybe. Give me a discount. I'm a cheap guy. I like to buy things on discount. Okay. This right here, I could check it out in an hourly chart. I could check it out on a 4-hour chart. I don't see a major sell-off volume, so it's positive, but why get in now when it could dip more? I mean, it has a chance of dipping more. If you have the name, I wouldn't worry about it because the selling volume isn't that large. It's just that if you're getting into it, if you want to buy into it, buy it with a discount. Yeah. Next up is NIO. I think I checked the chart today for NIO. And I've noticed that, and I think I've actually tweeted NIO today. It hit, and look how predictive these yellow boxes are, guys. I mean, this box has been sitting here for some time. You could check out my video. Perfect bounce off. I think it's gonna go towards 66, but it's like the Tesla's crashing down. EV sector is not as hot. I don't know what's going on with EV sector. Maybe people had enough. It was a good chart at one point, you know, the W and the flag. It's a reconfirmation. If it does dip, it could dip to 52. Just letting you know. But I'm looking for a bounce towards the 56. We can draw another extension, assuming that it's a double bottom here. So your first target is going to be $60.61. After it reaches there, it could come back to a cloud support of 57, and then eventually go towards the $69, $70 range. Okay, so that's NIO for you. NNDM, I think I covered this yesterday, and there was like a brief discussion on the YouTube channel. Honestly, guys, don't get yourself over stocks. They're just stocks. I mean, you don't get married to stocks. And people were discussing about the price, price to earnings ratio and so forth. It's like, yeah, but these stocks are not that kind of I mean, look at Tesla, Amazon, Netflix, all these names, right? This is not Apple where you like, all right, Apple, oh, it's, 50 PE, 50 times PE, okay, this is just too much, it's a growth stock and so forth, but these aren't growth, these aren't like, these are growth stocks. These aren't like your, dividend stocks that you can say, okay, it's getting expensive. Market decides what's expensive. I think the upside is still $17 on this one. Downside here is around $13, okay? If you tell me a direction to pick, the formation tells me that it's a falling wedge, which means it's bullish. It could go down maybe another couple bucks, one or like $1, dollars to maybe 13.62, and then go all the way up to $17, and then we'll reevaluate. Okay. Next stock is OPGN. Wow, this stock has been beaten down for some time. Let's look at the weekly. Well, for some time, I'm thinking for some time, but the stock doesn't actually have that much history. What's wrong with this chart? All right, for all I know, the chart looks messed up, maybe because of the Ichimoku cloud and the auto zoom is just messed up. But again, I mean, looking at the damn chart, it was like, $40, $50. Now we have to zoom in to figure out what the heck is going on. Maybe I should just do 90-day. On the hourly, it's a nice pennant. But then overall quality of the company, it's been down so much. I don't know what the reasoning behind is or the history behind it. You're looking for so on the hourly, there's a pennant. It broke off. It's doing a rounding bottom. Let's look at the 4 hours chart because I can't really make up anything out of this. I mean, you want me to be honest, I can just draw an extension and tell you where the 4-hour extension is, but these stocks are unpredictable. You're looking at $4 to $4.28, okay? I'm not saying this to make anybody happy. It's just the only bullish thing I can see in this stock, right? Only way basically I can draw the stock. And a good support around $2.11. So you pick, and the cloud line is $2.30. So you pick your side. I've drawn the 4-hour on the 4-hour chart. I've drawn the bottom channel support right here. So you don't want to break below it. Then you have your 20-day, 50-day moving average sitting at 286, which would be your support. In case of that, then the stock would crash. I don't know why on the daily, on the last year. Okay, now it's looking a little better because like 2 seconds ago my chart looked really bad. Yeah. Just don't lose this downtrend, and you're looking to the upside of $4 and $4.28. I don't want to say, since I don't know the stock, I don't know their product, I don't want to say like $8 or something, because I honestly don't know the stock. I don't know the volume. So if I say like $8, people jump into it and they're like, there's no buyers or sellers. So I don't know what the stock is, to be honest with you. And again, I don't want to look arrogant when I say this. I can't know every stock. I don't mean that it's a bad company. It's just that looking at the volume on the daily, I don't like to trade stocks like, that has no volume. Okay. Now, speaking of volume, there you go. Palantir, PLTR. This stock you can trade, you can put, you can trade anything on this one, any size of money, because I mean you'd have pretty good volume on this company. Now, not on the good side, of course, because there's been selling, there's been buying, of course. There's been sayings that I didn't check. I didn't go on Kathy's email letter, or newsletter, that somebody said she bought 500,000 shares. I don't know if it's total shares that she has or she just bought new 500,000 and a half shares. I don't think she'll buy 1.5 million shares on a dip like this yet. She probably want to see the lockup period. She probably want to see a flooring. Like I don't think she will buy anything that's dropping instantly. Like here she didn't buy it. You know where she bought it? She bought it right here. She saw this bottom. She saw this mini cup and handle. Now I think that she probably want to see a cloud support. She want to probably see some type of support. Now again, you see this bearish crossover? Now you want to wait for at least 2 weeks. I'm not saying the stock is bad. This is my favorite stock. I'm probably gonna, go in Palantir all the way in after FUBO again. It's just that I don't see any bottoming happening right now. And I'd see that worst case scenario, I think we're gonna have a solid support around $24. It's just probably gonna, this is my prediction. I might be wrong. Okay. So you're looking at like a mini cup and handle. And then hover over the cloud and so forth. So you're gonna stay here for some time. It's not gonna be like that, okay? So if you're going into Palantir or think of going into Palantir, do it in steps. Don't go all the way in and shoot for the moon. Just wait a little bit and scale in, okay? That's my advice. Next up is skills. We haven't looked at the stock. I think it reached our target and more. Okay. Supportive area, but again, it's been a hot stock. It's been giving to its investors. Cleaning up the chart because we have to reevaluate things here. I want this to close the gap around $32, $33. Because in that case, then you'll have a reason to a value reason. You get a discount. Like I said, like I'd like to get a discount. There you go. That's your pennant, and or a downtrend wedge, a down, descending wedge. If you want to see an upside to this, of course, it's harder now to guess the upside because we're at all-time highs. It's very difficult. But if I were to do one, there you go. And I'm probably gonna fix this up a little. What is the low on this? 25.57. There you go. So that's your extension, right? Right to the point. Now let's go ahead and do a retracement. Now you're looking at anywhere between 35.98 to, I can't even see the number, so I'm just going to draw a box and then we'll tell you what the numbers are. So there you go, around 33.62s, 33s, let's say 33.50 to 35.80s. That will be your support. Maybe I'm guessing the 20-day moving average, but that would be a breakdown of the pennant. So I want the 20-day moving average to go inside the pennant and then a bounce. We'll see what happens. I don't know the story to this company. I know Kathy owns it. A lot of institutions own it. You want to play the pennant, okay? That's what you want to do. You want to play the pennant, and the pennant can change a little bit here and there. I don't like the price closing below the 90-day moving average, but hopefully it'll get a support at 20. Just watch this pennant, and your next upside is going to be 58.06. SPG is your next stock. Simon Property Group. I don't know if it's a right. It looks like the chart looks, because they're so similar. I'm looking for a 9-day moving support. It's $104.52. and worst case pullback would be $99.16. In all honesty, I have to give you a technical, right? I don't like to do REITs, but because I mean they've dropped so much and they have an existing value, so why not, right? So it did reach the extension of 161.8. It could revisit the cloud top, around 94. I did say that $20 range, 20-day moving average is at 99. It could go there as well. Your ultimate target should be $136, but not at this point. I've told many times and many times that I don't like to buy things on the upper side of the channel. I like to buy things on the downside of the channel. So you're looking at 96, 99, around there, and then, sell it at the top of the channel. So that's your choice. But that's what I am. That's what I do. Next up is AT&T. AT&T is having a cloud resistance. However, if you're in this because of the dividend, it's a nice, dividend paying company. And I am seeing that established bottom. You're looking at to the upside 31.26 to 32. Let's round it off. It has not performed well since COVID. It actually didn't even recover since COVID. It's like the COVID lows are 26. The current price is 29. It's like $3. It's because of the dividend. I don't know if they have what is their dividend rate, like 5 to 6% last time I checked, but if you're in this name, it's a retirement stock. It's not a momentum stock. It's not going to move anywhere. It's a boring stock. So, having said that, you're probably going to go to 31 at max, okay? There's no real technicals on this, guys. It's just that it's a boring stock. And not a bad stock. It's a boring stock. Now, if you're telling me it hasn't covered since COVID, then yeah, 37 should be your range, but I don't know if it's going to get there in a year or so because it's a high dividend paying stock. Next up is TRCH. TRCH. Did I do this yesterday? No. I've seen this name. I don't know where I've seen it, but again, how can I do technicals on this? You guys tell me, right? 21 cents to $4.81. Now, where is it going to go to? How far can it go? It's all going to be a guessing game, and I'm just going to guess out of this Fibonacci, and it's going to be no better than what Fibonacci says. It could go about $5.92. It could drop down to $3. That gap fill right here. Again, I don't like to give technicals and estimates on charts that have been up over 400% in last 2 weeks. How can you do a technical on it? There's no goddamn chance of doing any technical on it unless you're doing 30 minutes, hour. I usually do daily charts. Like I said, the most upside to this is 592 from what I can see. Now you have a better technical, you have a better chartist that can do better. You can ask them as well, or maybe you just trust another opinion. You can ask them as well. On the hourly, your MACD, stochastics, and RSI looks bullish. Again, next upside would be 592. But again, I don't feel comfortable charting a name that has been up from $1.50 or $1.30 to $4.83 within a week and a half. Are you trying to see where you should sell? Are you trying to see where you want to buy it? That's another question that I'd ask, because that's another thing. When I'm reviewing the name, are you asking me you want to sell it and you want to see where it could, where you want to do a stop loss or something, or you want to maximize your profit, or you're looking to entry? That's also an important question to know when I'm analyzing these types of stocks, because again, it's only a dream for me to go to 130 to 483. That I wish I could catch something like that. Next up is Trip. I think this is TripAdvisor. I haven't done their chart yet. TripAdvisor. I haven't worked with their chart for some time. And what I do think about this with these companies like Expedia and these, I think they're a great investment for one reason. They don't have to support just like cruise companies, airlines, right? They don't have too much expense. It's just server. They could work from home. They could do cost savings. Again, I mean, their business might not be as much as before, but they can survive much longer than these cruise and airlines companies. And can you imagine if the cruise lines and air sector is going up and these guys are going to go up, right? I'm seeing the chart to go to $49 is my first target. Your next target approximately should be around, let me draw the boxes here, right? I like this chart better actually. You're looking at a resistance at 38.25, and then your next target is 46 and then 59. I have to see the weekly chart on this one to see where the stock is coming from. Yeah, broke the cloud on weekly. Wow. Okay, so revisit to 100-day moving average 29. So this is where you actually could be a long-term investment idea. Because I really like the story in this because it has been a good, company, TripAdvisor, but it has been a failing company since 2018. Maybe look at Expedia or any other companies, doing the same business. Maybe TripAdvisor is a little different than Expedia, but those online booking, sales, review. There's so many companies like that, and you can find a good quality one. They have less expense, and then when seasons open up and when travels open up, then they're gonna go up higher. So this is the right time to buy. Okay. Don't expect these companies that I just showed you, there's like a 300%er in a week. This is an investment. That's kind of a gamble in my. So now you're gonna dislike it or not. You can curse me out on that one, but if something moves up 300% in a week, that's kind of a casino gamble to me. But this is an actual investment. So you go in, invest, and then collectively just do a reoccurrent payments on this and just keep on collecting it. And eventually in 2-3 years, you'll probably double or triple your money. That's a kind of a game that that I would invest. Okay. So next up, before I actually pull the chart, let's go to 1 day, back to 1 day. Let's go ahead and do VERU, VERU. We've done this, a perfect bounce off or close the day right on that 9-day moving average. I see a defined, and I've actually, okay, so let me tell you this. If I put this right here, mark $15, that tells me that warn me when it gets to 15 under, because it seems like I want to buy this under $15. That's one thing, okay? So that means that I'm interested in this stock. It's a COVID play, definitely. It's definitely on the pennant side here, okay? So you're looking at a nice play here. I've seen some names on Twitter liking this company, reputable names, of course, that I consider following. So you're looking at a pennant here. You're looking at a 9-day possible bounce. Let's see how the 9-day holds, but I don't know why. I guess the Fibonacci level here that I'm looking for $15 or below, that would be my entry point. Again, I like to buy things cheaper, but why not the 9-day moving bounce, 9-day moving average bounce would be also a nice play. I like the stock. I think it's a good investment. Again, this is high risk investment because it's $2. Now it's, sitting at 17. So you're paying a lot of premium for this stock because it's been, it's on a trial for COVID and so forth. So it could fail and your money could go back down. It could go back down to $2. So that's how much you want to invest. You're like, okay, I'm buying this at 17. What if it goes back to $2? Then, you got to invest that much. Next up is WBA. So WBA. I don't like the rounding top. I don't like the MACD stochastics or RSI. Now it might be Walgreens. Is this like the actual Walgreens we're talking about, like the pharmacy, or I don't want to say pharmacy, but like your, CVS type of store? If that's the case, I think their business should be good if that's the case. If they're doing like COVID tests or something, like they should be. But what I don't like about these Walgreens and CVS, I hope I'm talking about the right Walgreens, you guys know, that their items are so expensive. I can go to Walmart, and I'm talking about like any, over-the-counter medicines or just any grocery items. Like they're just over-exaggerating their price. So, I always mention like I like to buy things cheap. What I mean by that is I buy good quality on a discounted price. And you can buy, you know, I don't know, like like a North Face jacket in the summer for 30% discount. And you can buy the same jacket in the winter for, 30% more premium. So that's what I mean. Buy the same product but cheaper. So anyhow, coming back to our details here, it could bounce from 47.5 and it could go back to 53.9. The most upside I see here is 64.5 dollars here. Okay, 64.50. Let's zoom back out, auto zoom. I do see an established rounding bottom. I do see a breakout. It's a slow moving stock. It's a dividend stock. Treat it as that. If you're buying this because you want to make quick bucks, is not the type of stock. On the weekly candle, it is at a resistance, so just a critical point. I do think that it should get a bounce anywhere from 47.50s to a little, less than that. But for a long-term chart here, if it is able to break above the cloud and contain, I think it'll be a good bounce. But as you can see, since the COVID levels, it has not, look at the 2020 February, it's sitting around 57. It has not gotten into it yet. It's a long trend of channel, but look at this. I mean, if you have patience and you're like, I don't care, I'll just buy and forget type of investment, that long-term downtrend has been broken down. That rounding bottom has been established. If this gets over $54, I think it's going to go to 81. Okay. Next stock is Excel, and we are tired. It's been an hour and 52 minutes of a review. Long talk. Sometimes you get off topic. You refresh our mind, come back to the game. You know how we do things here. It's not always work, work, work. We like to have some fun. Excel, let me reevaluate because this is weekly. Let me go back to the daily, right? Just looking at daily. Levels are very obvious here. The support level is 1880. The resistance is 2247. A rounding bottom is trying to be established, but I don't know if it's going to. So you want to get, so this is the rounding bottom, right? This is your downtrend. You don't want to buy here because it always has a potential to break down or go down lower. What you want to do is you want to buy when this downtrend is completely breaking out. But the issue here is that this is going to be a wall. And it has been for like so many months. Okay. If honestly, like if you're in this game, if you're in this name, you need to hold it long. And a lot of the names that I'm seeing that was a spec, like merger off of a spec, is having trouble. Like I've not seen names that have like, looking at Clove and other names, that as soon as they merge, it's like nightmare, I don't know what the issue is. I don't know if institutions are trying to punish them for not, doing a IPO instead of, and you look at Palantir doing a public, offering, or public direct offering instead of IPO. They've been punished by the analysts that I call them. They're giving like low ball, price targets because they couldn't get in. So they're trying to give price targets on the price levels that they could have gotten in. So that's the issue with these things. Institutions are not going to be nice to these names. I see an upside to 2210, 2220, downside to 1920. So that's your trading range unless one or the other is broken above or below. I'm not excited about the name. What can I say? I like the company. I like the business. I like the business plan. It's just that it's like you'll get a spike and it'll hit like 22, and then I don't know what it's gonna do. 22.53. It could go down to like 1890, 1880, and then like stay there. Like it's like I don't see anything in the chart, and I want to be honest. And we said that long term. We're seeing. I think that that's drawn wrong. I think it should. And even when I draw it wrong, I say it's drawn wrong. But yeah, you could have a long target of $30. It's just that put the money that you're gonna forget, because it's gonna take its sweet time. And then it's all under the moving day averages right now. That's also frustrating. When the price was above the moving averages, then it was all okay. It's under the Ichimoku cloud. It's under all the moving day averages besides the 100-day moving average, and probably 200, if it has 200-day moving average, because it's a new stock. And then I don't see any like internal signals of stochastics, MACD, and RSI, so I can't say anything. That's the issue with Excel. So that being said, we're all done here. I am done. I am done talking. I'm probably not going to talk for the rest of the day. I'm done. Tired, but I think it was worth it. I hope that I was able to help out. No emotions. If your emotions are hurt, that means you're playing emotional. So you don't have to blame me. I'm just reading the technicals, whether you like it or not. If I said something that you didn't like about your stock, that means that you're an emotional investor. Okay? Always have a second point of thought. Always look at things. The stocks are not your wife or your husband's. They are stocks. They're to be bought. They're to be sold. Unless you're doing a long-term plan of 401k investment, college fund, and you just keep on buying Apple for like the next 20 years, that's another thing. But I don't think anybody that's listening to me is doing that and will do that. So that's my conclusion. No emotional investment, and no marriage to any stock. Love it or hate it. You gain money, you make 100%, you make 50%, you make 200, 300%, sell it and forget it. Okay? That's all. I'll see you guys tomorrow.